Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to go over an article from economists that are warning of turmoil in the housing market as they give their bleak predictions on what happens next. Now, in addition to that article, we're going to go over several data points so I can show you guys what I expect that's going to happen in the years to come as far as the housing market. We're going to look at things like how much has property taxes gone up, homeowners insurance, what will happen with foreclosures, what's going to happen in the housing market. You're going to get all of that today. And if you guys can, don't forget to like this video, comment if you haven't already, share it, and no matter what, I hope you guys learn. So I'm going to try to do this video as fast as possible. This is an article from Newsweek titled U.S. Housing Market Given Bleak Prediction. It will take more than 7 years for the U.S. to solve the current housing affordability crisis and build much needed inventory at the current rate of construction, according to Realtor.com, which is very interesting that they said that, being that we have over 8 months of supply. In other words, we have a ton of supply with new homes. I think that all we really need to do is make more affordable houses, lower prices, lower payments, things like that. But they're saying 7 years. So 7 years to take care of this issue. Let me know whether or not so far you guys agree with what they're saying. While home supply has grown across the country over the past year, with Florida and Texas leading the way, the U.S. still has 3.8 million units less than what America would need, the real estate listing website reported. Now, I'm going to fight back on that, you guys. I don't think that's true at all, especially when we look at homes per capita. It's never been higher. And also, we're only about 300,000 short of active listings for us to have normal active listings. This whole 3 to 4 million homes short is complete nonsense designed to get you guys to buy. In other words, if they're saying that we're so short of inventory, that means that prices should stabilize. So essentially what they're saying is because prices will stabilize, it's going to take 7 years to fix. Just go buy a house right now if you can afford it. But they don't explain what affordability means, such as only 30% of your net income going towards your mortgage and having a year's worth of money saved and having no consumer credit card debt. Those are some things. For aspiring home buyers weighed down by rising home prices and stubbornly high mortgage rates, which is not true, this is a bleak prediction that relief won't be coming as quickly as hoped. It is also bad news for Donald Trump, who promised to lower the cost of housing and grow supply during the first years of his second administration. Why it matters. In the years following the U.S. subprime mortgage crisis of 2008, which plunged the country into a deep recession, the country massively underbuilt in the face of a new family formation and growing demand. As a result, a historic shortage of homes has led to skyrocketing prices in recent years. I also want you guys to remember, this is BS. Interest rates were in the 2%, and they gave us the down payment in the form of stimulus. They keep leaving that out. They gave us money and they artificially lowered interest rates. That's why prices went up, or at least a primary reason. And obviously that affected supply and demand dynamics. As of March 6th, the 30-year fixed rate mortgage was 6.63%, according to Freddie Mac. Experts expect mortgage rates to continue hovering between 6 and 7% in 2025 and in 2026, eroding the purchasing power of aspiring home buyers. What to know? The good news is that home builders are aware of the problem and have ramped up construction efforts over the last year. This is just so crazy because over the last year, it's actually gone down. It peaked in 2022. It's been going down since 2022. So these articles, especially real estate articles, I find them so absolutely ridiculous. It's hard for me to even read it. That's why I haven't been doing as many real estate videos, because the data is BS and the people that are reporting it have clear financial bias. But anyways, maybe I'm wrong. Let me know what you guys think. For the first time since 2016, new home construction outpaced household formations last year, with roughly 1.4 million housing units started. According to estimates by the National Association of Home Builders, single-family home starts totaled 1.01 million, up 6.5% from 2023. Total housing starts, however, were 1.36 million, down from 1.42 million in 2023 due to a decline in multifamily construction. Single-family home building increased 6.5% in 2024 as builders added more supply in the market, continuing to face a housing affordability crisis due to elevated mortgage rates and higher construction costs. Again, they do not put the price in here. They talk about everything except for the price. Why do you guys think that is? I believe it's that way because they want you to feel like it's impossible for home prices to go down, even though we've had 5 times in history where home prices have plummeted. 5 times. Nonetheless, the industry expects to see a slight gain for single-family home buildings in 2025 because of persistent housing shortage and an ongoing solid economic condition. Solid economic conditions. Again, they're also failing to talk about the median household income, which is the only thing that matters. The reason why new construction finally outpaced new household formation is sobering. At least 1.6 million expected Gen Z and millennial households did not form in 2024 because of factors which included a lack of affordable housing. Where's the income? In short, people are not settling down and becoming homeowners because they can't afford to. Why? Explain why, Newsweek. Is it because of income and prices being too high? Yes. While the supply gap has diminished in the last year, it was still the 3rd highest since 2012, behind 2020 and 2023. Even as this increased rate of construction, it will likely take 7.5 years to close the current housing supply gap in the US, Realtor.com found. It is going to take many years to build out of this problem given the size of the deficit. But that's not true. The reason why it's going to take so long is because the prices and affordability has to keep up with median household income. Okay, it has all of this stuff that this article is saying is absolutely foolish and ridiculous. They're not saying anything. This is freaking stupid. But I'm going to swallow the medicine and I'm going to finish this. South to get out of the crisis first. The U.S. housing market is incredibly varied, and some parts of the country are expected to solve the current inventory crisis before others, especially Texas, Florida, when compared to the East Coast, like New Jersey. According to Realtors.com, the South would be able to close the housing supply gap in only 3 years, baby, at the current rate of construction, which is higher than any other part of the country. But I'm telling you guys right now, they are underreporting the inventory. There's a lot more than what they're saying, and they are in distress. New home builders will always be distressed sales because they need to sell. They have to sell to stay in business. Texas accounted for 15% of all new home construction permits in 2024. That's crazy. The West, they're saying, would take 6.5 years to close the gap, while the Midwest would take, this is crazy, 41 years. 41 years, and the Northeast may never see an end to the crisis. And I see that in the inventory. If you guys don't believe me, again, the house market is bifurcated. I'll show you inventory in Florida and Texas skyrocketing. But when we start going to the East Coast, the inventory is real bad. But so is affordability. The National Association of Home Builders expects single-family starts to grow just 0.2% this year to an annual rate of 1.01 million units. In 2026, it foresees single-family starts to increase by an additional 4% to 1.05 million units. Now, I would be surprised to see that, especially if we start recession. If we start recession, you guys, I see less starts, not more starts, because they have to sell what they already have. And generally during a recession, at minimum, consumer demand goes down. However, housing experts have warned that Donald Trump's policies could have a negative impact on construction efforts across the U.S. Tariffs on Canada could increase the cost of softwood lumber, a crucial material used for home building, which the U.S. imports heavily from its neighbor. Further to this, mass deportation of migrants could cause a labor shortage in the construction sector, but that's only for illegal immigrants. I wonder what that means about home builders. Is Lennar using illegal labor to build houses? Comment below, yes or no. If there's high tariffs coming and the lumber prices spike back to where they were in COVID, it's going to be a problem. But when they spiked back in COVID, home prices were like $80,000 less. So who cares if they spike, to where they were at in COVID, as long as the home prices are $80,000 less? Think about it. This is so stupid. I hate this article. Homes are going to stop being built. Yes, they will. Apartments are going to stop being built as well. Home builder sentiment has been on a bit of a roller coaster ride lately, stemming from mortgage rates, concern about housing demand, and now tariffs and other policies. We are going to see builders continue to build, but they are heading into a challenging environment. And so I think there's a legitimate question around how much they'll be able to eat into this gap, unless we see some significant policy change. So what all of that means to you is if you've been patient over the last 2 to 3 years and you've been working on your purchasing power, I've made courses, I've been talking to you guys about this for 3 years, you should be in a position to take advantage of a deal of your lifetime. Now, if you're in some of the tighter markets out east, it may take a little longer than if you're in my state, which is Texas or even Florida. I already seen deals right now, but the problem with my market is even though I'm finding good prices, meaning the sell price, although it's still elevated, but kind of good prices, the problem is the astronomical increase in both property taxes and homeowners insurance. So what I want to do now is let's do an analysis of the current state of the housing market. And I want to start that by taking a look at demand. This is Mortgage News Daily Purchase Index versus 30-year fixed. The purchase index is telling you the demand. Now, the demand, you can kind of barely see. It's those gray lines on the bottom, which is below the orange line. The orange line represents the interest rates. Something important to notate about interest rates, as interest rates have been going down, you see that right here? Interestingly enough, so has demand. So demand has been going down with interest rates. Normally, you don't see that. It's probably because, you guys, we're seeing a recession. But the other thing I want to point out is since about mid-2022, we literally, the housing market, from a sales and transaction perspective, it's in the gutter. I mean, sales and transactions right now are as low as it was during the global financial crisis, but we have more population now, which means demand is even worse. One primary reason that is the prices of homes. Everyone wants to talk about payment, but I said, don't talk about payment, talk about prices. Price is more important than payment. When we look at the home price to median household income ratio, we are sky high right now, sitting at 7.29 years of income to pay off your house. It has never, ever been this high before. And this is going back 70 years. Even during the housing bubble, it got to about 6.7 to 6.8. So we exceed that. Right now, we have a bigger price bubble right now than the global financial crisis. And so these overwhelmingly high prices are leading to less demand. But people also like to talk about the payment. So let's also talk about the payment. The national payment to income ratio is again as high as it was during the peak of the global financial crisis. In fact, it used to be higher, but now it's down to 33.5%. But that's not accurate because in order to come up with that 33.5%, they're counting a 20% down payment. And they are not counting property taxes and they are not counting property insurance. Property taxes and property insurance right now has skyrocketed much more rapidly than during the global financial crisis. So this is probably more like 36 to 37% when we take those things into account. Nevertheless, both payment and price are through the roof. Now take a look at this. This is absolutely crazy. This is the average property insurance increases, guys. It went from, in about 10 years, $1,300 to $2,290. And when we go down here to this section where it says change in payment, interest, taxes, and insurance, this is going to look at the 1 year, which is in gray, and the 5-year change. Look at the 5-year change for property insurance. Property insurance in 5 years has gone up an average of 61%. Property taxes has gone up an average of 22%. Unless you're in my area, it's gone up a lot more than that here in Harris County, Houston. Interest has gone up, which is your interest rate, 21% in 5 years. Principal, which is the price of the house, has gone up 21%. It's more than that. It's more than 21%. The total payment has gone up 24%. I question some of that math. That doesn't seem to be adding up. Let me show you how much of a con this is. So you guys can see that I'm in Houston. So I'm taking one of the biggest hits when it comes to annual insurance premium. So my annual insurance premium has gone up about $515. Okay. This is comparing 1 year. So this is December 2024 to December 2023. So I don't know how in 1 year my insurance went up 16%. But here's the scam, you guys. Look at Dallas right here, circling it, went up 20%. Dallas went up $606 a year. I'm in Houston. I deal with hurricanes, flooding. I'm on the Gulf of America, not Mexico. I'm on the Gulf of America. And so the fact that Dallas has gone up more than Houston makes absolutely zero sense to me. But look at, I mean, in Texas, yeah, the prices are going down. But the point I was trying to make earlier is, yes, the prices are going down here in Texas, but the freaking taxes and insurance are through the roof. So it's very difficult for me to pull the trigger, even if I find a home that is priced right. Just to prove to you guys that home builders are actually not as well off as they think and say they are, I could have just brought up their stocks and shown you stock decline, but I wanted to show you price cuts instead. This is Lennar's website. This is in Houston, and the first two listings right here have a $100,000 price cut. So these are multiple price cuts right here. When I scroll down, look at another price cut, another price cut. This is about 80,000. This is about 30,000. I mean, almost all of their inventory, you guys, has price cuts. Do you think that they're doing price cuts because they're selling so many homes, or do you think they're doing price cuts because they can't sell the homes that they have right now? I mean, seriously. Now, when we look at inventory, look at Florida. Okay, now this is what I suspect is going to happen to many different states as we get through the recession. Because remember, it's going to take years for the housing market to repair after we're out of the recession. But look at the inventory. This is insane. This is active inventory for the state of Florida, which has one of the biggest housing markets in America. So I think it's really important to talk about it. This is a maximum graph. This graph goes back to 2016 July. So this is showing that as far as active inventory in Florida, they've never had this much inventory, according to this chart, and it's February. So inventory goes up from here. So if Florida has more inventory than they did pre-pandemic, yet buying demand is much worse, what does that mean, you guys? More than likely, it means that if you want to sell a house, that your house is going to sit on the market for a lot longer, and you're going to have to deal with even more competition as demand goes even lower, especially if we head into massive job loss and massive foreclosures. Demand is going to go down, maybe not from investors, which is another problem we'll talk about later, but from normal Americans that have not been prepared, that have been keeping their head in the sand. They're going to get bamboozled. So the longer that a home is on the market, generally the more likely it is that that seller is going to cut costs. And if they're selling out of distress, like most people are, the odds that they're going to cut their prices are high, because they will have to, because they are forced sellers. All of that to say this, you guys, if you are interested in purchasing a house, remember three things that are incredibly important when it comes to financing: your credit, your income, and your assets. So you're going to want to make sure that all three of those things are at maximum efficiency, and never ever use your emotions to buy a house. And if you want to trust a realtor, fine, by all means, go trust them, even though you shouldn't. But, and there's a huge but here, verify. And the way that you verify is use the math, review the comparable sales, and figure out what the wedge is and what the cash flow is. You guys already know I have a course. Don't forget to go to that course on the Real Estate Mindset Empowerment Center. And other than that, you guys, let me know if you like this video, these little quick housing market update videos. And if you guys are out there investing in real estate, you guys already know I wish you luck, and I hope you win.